Well, hello everybody, welcome back to another episode of the Forex analysis session. My name is Alexander Nikitin. I am a professional trader and a developer of pattern search software. And in today's video, I will talk about the trading opportunity that I entered earlier today, and also I will explain you the step-by-step process of decision making. So in this trading opportunity, I've been using the 3 screens method. So what is actually this 3 screens method? This means that not only I use one time frame, but I also use a higher time frame and a lower time frame. So the idea was initially set by Dr. Alexander Elder. He was a Russian psychiatrist, moved to USA, and then he became a stock trader. He wrote some books. How to win in stock markets, something like that, and trading with Dr. Elder. So in some of his books, you may Google that, Alexander Elder. In some of his books, he explains the idea of 3 time frames, and now the idea became very popular to do the top-down analysis, start from higher time frame and then go lower and lower and lower. But initially it was set a bit differently. You first need to look at your trading time frame, then you need to look at your high time frame for confirmation, and if you have a confirmation, then you need to go lower to your lower time frame for entry techniques to execute your setup. Okay, let's do it the traditional way. Let me show you how it should be done. We first need to go to our time frame. Trading time frame is 1 hour. And how to set your trading time frames? I just forgot to say this. Alexander Elder supposes that you are to use multiplier 5. So what is this multiplier 5? If your trading time frame is 1 hour, then multiplier 5 means that your higher time frame will be 5 hours, and your lower time frame should be, what was it, 60 minutes divided 5, 12 minutes. Okay, I don't have in MetaTrader 4, I don't have those custom time frames. I cannot set them here, so I will use conventional time frames, 4 hours and 15 minutes. This way I will only have the multiplier 4, which is pretty good as well. Okay, so what is the method about? We first need to identify what's going on our trading time frame, and we see the downtrend. The downtrend is a series of lower lows, you can see that, followed by lower highs, and the first time we break and close above our previous lower low, this signals us that the downtrend is over and we may have a potential bullish rotation. So here we have the previous low spiked through, but we didn't close that, and you should double check it with your broker. For example, with trading view brokers, what is this, FXCM? Yes, we have lower lows and the series was not broken at all. So I suppose this large green candle is absent. I don't have that large green candle, that should be somewhere here, but it doesn't matter. If you do some trading, if you're using some techniques, you should backtest it with your broker. This is very important. Different brokers provide different quotes, slightly different from each other, and if you simply copy the signals from one trader, maybe your broker will be stopping you out and your signal provider is not stopped out, or maybe the signal provider will be triggered, the trade of the signal provider will be triggered and you will be not. So of course you need to understand what you are doing yourself, and that's why you have to do the backtest. Okay, when I see those kind of formation, those zigzag formation, I start thinking about the Elliott wave theory. Elliott wave says that we have 5-wave decline, 3-wave correction. So these zigzagging formations are typically terminate at the end of the previous wave 4 or whatever it is. Suppose this was the wave 4, and this provides us a very good opportunity to resume the trend if we are trading with the trend, or to continue consolidating if we are consolidating, or to reverse the trend. In this case, the pattern will look like a double bottom or double top. Well, in this case, we are kind of trying to resume the trend. I dislike this movement being that shallow. Actually, I like it to be more deeper as compared to previous movement like this. But nevertheless, this trade is not only the setup that my software can draw. This trade is the total idea of how to use your trading. Okay, so what is the setup? The setup by itself is a bad advanced formation. It is drawn this way. So what my software does, it calculates this leg, this leg, this leg, and then it calculates the proportions between these legs, the ratios, and if those ratios stay within the predefined rules, then the pattern is valid, and it draws the pattern, and with recommended entry and recommended stop loss. Stop loss is 1 ATI above the X point. This is the highest high. So this means if price breaks and closes above here, it most likely be invalidated. So this is also proved by the idea of low low and low highs. Next, what we should do next, we should then go to our high time frame to look for some confirmation. And if we switch to 4 hour time frame, we are going to short. Yes, let us delete this stuff because we don't need this anymore. We already know what we are looking at on 1 hour, and let us draw some lines. Maybe this, connect these highs. No, trend line properties, ray. Okay, and this lows. So what we see the descending lows, lower and lower and lower. Sorry, the descending highs, lower and lower and lower. This means that sellers, bears, are becoming more and more aggressive. What it means aggressive? You wait first until price goes a bit higher to get the better price to sell, and when you have those lower highs, this means that the sellers become more aggressive. They already agreed to sell even at that lower price, and then even lower price they sell even lower and lower and lower. So this means they become more aggressive. And the buyers in its turn, they stay well, almost horizontal line. So they are kind of having the defense. Sellers are attacking and the buyers having the defense. So typically this is called an ascending descending triangle, when this leg is horizontal and this is sloping to the downside, and when it is broken to the downside, we have a resuming of downside movement. But it is hard to say here. Maybe it is a simple symmetrical triangle, but obviously the highest trend line slope is greater than the lower trend line slope. This means the bears are in control. So you should keep that in mind, the slope of the trend line as well. Okay, so if bears are in control, we are going to sell, and here's the level we are looking at to sell as well. Let me place that horizontal line. Is this a good level? Well, yes, why not? Look at this. It was previously respected here, here, respected here, here, kind of here, spiking that, spiking and rejecting here, here, and here, and finally it was rejected here and here, as we saw it on our 1 hour time frame. So we are sitting at a major reversal, let's say pivot point or whatever, support resistance. But guys, you should keep in mind, although we are reversed at this level, we also break through this level. Sometimes we reverse from that, sometimes we break it through. So don't bet all in, because this is a very powerful level or whatever. Okay, so we have a bias to the downside. We are sitting at the kind of major resistance level. We are well, not that quite. 113 even candle, 113 round. No, it is far away. Okay, so we have this for our kind of confirmation, a powerful level, very good, and the bearish buys. Okay, let's switch to 15 minutes, and now we are looking at the technique for entry. First of all, let's draw the pattern itself. It looks this way, yes. And now let's see what happens. So this is the pattern. Don't pay attention at this price yet. What I want you to pay attention to is this kind of movement. It looks this way. If we connect these highs, maybe, yes, and if we connect these highs, what this movement looks like? It looks like a wedge pattern, yes, and typically when it is broken to the downside trend resumes. So although it slightly exceeded the previous high, but it is only with my broker. It was a false breakout here, and that's why I didn't enter with traditional level. I didn't enter aggressively. I saw these big green candles, and I just thought, well, we have that momentum, let it first fade out, and then we will see. But on trading view, it was not broken. You saw that. Well, what happened here? I made a decision that I will only enter when I have the first candle close lower below the, look at this, lower below the previous low. Not only the bearish candle, but also it should have a lower low and lower close below the previous low. This was my trigger, and my stop loss here was this. Let me draw it. I have a special ATR calculator here, so this is my level and this is my stop loss. If I drop it here, you will see that we have a kind of net formed by these arrow marks. Let me delete unnecessary stuff, so we only see that. So initially my stop loss was this, just above the extreme. So this is the extreme. To set the trade, I simply stretch the Fibonacci's like this to this. I set my stop loss, marked that, and I simply pressed letter M to open a market order, and Pattern Trade Assistant just opened that according to my money management that I set. Well, but it doesn't matter. Okay, as for targets, I have chosen this previous low of this last movement of descending wedge. So this previous low. First of all, it coincides with 50% retracement. Although 382 is also a good structure, we could take the profits at 382 as well, and still be with good risk to reward, 11 pips versus 22 pips. But I'm looking at this extended target on this trade. As we hit 382, you see I break even the trade, and now I cannot lose money unless I gap through my orders. And also look at this 50% level. We had this kind of consolidation period here and here, and this resistance turned into support. So I am thinking to buy it here. That's it. Also we can have it this way. Why should I buy it here? Because of this? No, I thought we have a pattern here, but not yet. The software says we don't have it. Okay, so that's it. I first found a downtrend on 1 hour. I identified that. I predicted, well, if we have a downtrend, then we should likely to continue lower. If we are likely to continue lower, how can I get involved? Well, this looks like a good bearish bet formation. Then I went to 4 hour and I saw that the level I'm sitting right now is a powerful structural level, and we also have some bears in control in major picture. And then I switched to 15 minutes. I found that wedge pattern also as sign of decline. Once again, this is the wedge pattern, sign of bears losing power. And also I found this thing. You see these highs are going higher and higher, and we here already have lower lows. So we started putting a lower low, so this was at average. As you can see, I entered just at the top of this, much higher than the initial entry, than the conventional entry of a buy pattern. Trade 2 is hit, the trade is break even. Now looking for my targets to be hit, or maybe it will go back and hit break even. Who knows, anything can happen. Well, that's it. Hope you like this idea of using the 3 screens, filtering your trades, maybe becoming more conservative, not that blindly following the setups that the software provides, although the setups by itself are very good, but you know that you have to put edge in your favor. You have to have a solid advantage over the other market participants. The patterns gives you a pretty good advantage. They give you a pretty good edge, 58-57%. But even with this, you may stuck in some period of losses when 16 losers in a row is not a very rare thing. It happens pretty often. So in order not to have that series of 16 losses in a row, we try to put more edge in our favor. That's why we use high time frame filters and lower time frame confirmations. Okay, hope you got the idea. If so, give me a thumbs up, share this video on social media. Until then, good luck and good trading. Hope to see you soon.